This is Matthew Cratter from Trader University, and today I want to talk about how to use a Bitcoin loan to buy anything. If you listen to this channel a lot, you'll know that I often say I'm never going to sell my Bitcoin, and many of you have wondered, does this mean that you don't get to enjoy your Bitcoin profits? Now, the good news is in this case, you can sort of have your cake and eat it too, as we're going to discuss. But before I go there, I should point out that none of this is investment advice or tax advice. Now, let's say that you watched my April 6, 2020 video on Bitcoin. This was a great time to buy Bitcoin. It was trading at around $6,000 per Bitcoin. So let's say that you were lucky enough to have seen that video and had the guts to put $6,000 into Bitcoin. You're now the proud owner of one Bitcoin, which is currently worth about $63,000. As I discussed in that video, price target for Bitcoin in 2028, I think a fairly conservative price target is $3 million per Bitcoin. And so let's say we're now in April 2028 and you're ready to enjoy your profits. So you decide to sell your Bitcoin. Now, if you're in the US at least, which is what I know best, when you sell Bitcoin or when you spend it, but basically when you sell it, you need to pay capital gains taxes. And I'm just going to assume for the sake of this example that President Biden is successful in pushing through his tax hikes and hiking the cap gains rate, the long-term capital gains rate, to the highest bracket, which he will raise from 37% to call it 39-40%. And so these are the taxes you'll need to deal with in 2028. Regular cap gains tax, probably that Obamacare tax surcharge is still there for high earners. If you're selling $3 million worth of Bitcoin, you're definitely in that tax bracket. And then you'll probably have to pay some sort of state income tax. In Colorado, it's currently 4.63%. So you add all of these up, you get about 48%. And I know for you tax professionals out there, these things are not strictly additive, but I'm just making it very simple here. Maybe it's a little bit less. Maybe it's like 46 or 47%. Either way, you paid $6,000 for your Bitcoin. You sell it for $3 million, and so you have $2.994 million in profits. You take 48.03% of that, and you end up paying $1.4 million in taxes, and you're left with about $1.561 million. Now, that's still a lot of money, and considering you just watched a YouTube video, you only invested $6,000, you still end up with $1.6 million, which is amazing money by any measurement. The problem with this is that 1.56 million is now sitting in US dollar fiat in your bank account. Presumably, it's losing value every single year, probably by 10 to 15%, as the Fed will just continue printing for the coming decades. And by selling your Bitcoin, you've also given away all potential upside to Bitcoin's price. Now, you've also paid a lot of taxes. With your taxes, you've probably paid for some cutting edge government research. Here's one on, how shall we say it for YouTube, the romantic behavior of Japanese quails that have just taken cocaine. This was an actual US government study. So obviously your tax dollars are not being used very well. So these are the problems with taking profits on Bitcoin and selling for fiat. But what if there's another way? What if you could just borrow against your Bitcoin instead of selling it and having to pay taxes on it? Now, the nice thing about this is that even if you have really bad credit, if you have a bad credit history, no good credit score is required for this, because this is what's called a collateralized loan or a Bitcoin-backed loan. The loan itself is secured by the Bitcoin. So there's really no inquiry necessary into your past financial behavior or your credit score. It's just irrelevant because you're putting up really good collateral that backs the loan. And so this is how it works. You give the lender some Bitcoin, they give you US dollars after charging you an origination fee. So here's an example. You may be asking for a $10,000 loan, and they'll just take the origination fee out of the loan. So you'll end up getting $9,900 after that origination fee, which is deducted. And that's a one-time fee that the money is just gone. On this loan, because it's a loan, obviously, there have to be interest payments, usually monthly interest payments. Right now, the interest rate on these Bitcoin loans As far as I can tell, I haven't done this yet, and I don't plan on doing it until Bitcoin is in the millions. But right now, that annual rate is fairly high. It's like 9 to 11%. In the future, I expect these interest rates to fall quite a bit because Bitcoin really is the most liquid, pristine collateral out there. If you compare it to, example, a loan against your house, which is called a mortgage, or a home equity loan, these are very difficult for the bank to liquidate. If they have to foreclose on you because you're not making your payments, they need to go through a lot of legal proceedings. They need to wait months, and then they need to list and sell your home. It's not very liquid. By contrast, a Bitcoin collateralized loan, if it drops far enough, they can just liquidate it. They can sell it. It's a very liquid market. And it's a very easy market to evaluate for a bank. We always know what a Bitcoin is worth, whereas evaluating what a house is worth can be more difficult. All of which is a long way of saying that I expect these interest rates on Bitcoin loans to fall quite a bit in the future. They should eventually get down to 1 or 2% because they're pristine collateral, just like a U.S. Treasury, and they don't have that same devaluing property that U.S. Treasuries do. Now, even now, there are people who choose to pay this 11% interest rate. When you consider that Bitcoin's been going up approximately 200% per year compounded, this paying an 11% interest rate is not a very big deal, even though it is a fairly high interest rate by most considerations. As long as Bitcoin is appreciating at a rate that's higher than your interest rate, you should be good. This is how mortgages work as well. Now, what happens at the end of the loan term? You pay back the US dollars that you borrowed, and they give you your Bitcoin back. Now, if you stay tuned, I'm going to show you a way that you never have to pay back those US dollars. But I need to sort of set the stage for that first. Now, when you give your Bitcoin to the lender, it will be typically held, at least in the best setups, the only setups that I would consider, it would be held in a multi-signature account. I believe Celsius offers Bitcoin loans now, but they're not multi-sig account loans, and so I would never consider them. A multi-signature account is just a public address for Bitcoin where various parties hold private keys, and you need a majority of those keys in order to move the Bitcoin. So the most typical setup is what's called 2 out of 3 multi-sig. You can also have 3 out of 5. In 2 out of 3 multi-sig, you need 2 private keys to move the Bitcoin. So in this kind of Bitcoin loan situation, with a multi-sig account, you would hold one key, one private key, and you would hold it on a hardware wallet like a Trezor. The lender would hold one private key, and then a neutral third party would hold the third key. And as I said, it takes 2 keys to be able to move the Bitcoin. Now, it's very important to make sure that the lender cannot and does not and will not lend out your Bitcoin collateral again. This is what's called rehypothecation. And you can imagine when the same collateral is being lent out multiple times, which is what happens on Wall Street all the time with your stocks, for example. This creates a lot of leverage in the system and can create really bad avalanches when the price of the collateral goes down, and can create systemic risk. So you want to make sure that your lender is not relending or rehypothecating your collateral. In a multi-sig setup like this, it's very easy to check because you can go to that public address and you can confirm that your collateral is not being lent out again. If you're finding this video helpful so far, I'd encourage you to hit that subscribe and like button and maybe share this video with a few friends as well. I currently know 2 services that look legit to me. Again, I haven't used either of them, that offer Bitcoin loans in a multi-signature context. The first one is Lend at HODL HODL, which I will link to. The other one is Unchained Capital, which offers Bitcoin loans. So how would this work? I'll use Unchained Capital as an example. They typically require, at least at this point in time, a loan to value LTV of 40%. So what this means in regular terms is if you want to borrow $40,000, you need to deposit enough Bitcoin that's valued at $100,000. So the loan is $40,000, the collateral the value of the collateral is 100,000. So that's how you get that 40% loan to value. In this sort of situation, if Bitcoin falls more than 60%, you would need to post more collateral. You would get what's called a margin call. And so this is one of the risks, of course, against borrowing, about borrowing against anything. If you take out a big mortgage and the price of your house falls and stays down, then you have a problem. This is true for all collateralized loans. That being said, a 60% drawdown, while it's not as deep as drawdowns we've had in the past, I'd be very surprised if we ever get a 60% drawdown again. But I'm going to show you can size your loan in such a way that you can be protected even if Bitcoin falls more than 60%. So what you could do, for example, if you have $100,000 worth of Bitcoin, you can post $80,000 worth with Unchained Capital. You can keep $20,000 worth of it on the side. And again, I'm talking about this Bitcoin in terms of its US fiat value, just to keep it really simple. If you do a 40% loan to value on that 80,000, allows you to borrow 32,000, but you know that you've got an extra $20,000 on the side, whether it's in cash or it's denominated in Bitcoin. And so that way the price of Bitcoin can fall 85% and you'll still be fine, because you'll have this excess 20K to cushion the fall and to be able to post excess collateral if you get a margin call when Bitcoin falls 40%. So that's one way to do this in a very conservative way. You can decide how big you think a future Bitcoin drawdown will be. I think they will be much more shallow, in part because in the past, in 2013 and 2017 Bitcoin bull markets, you needed to sell your Bitcoin to take profits. Now it's much easier to just borrow against your Bitcoin. And so I think the cycles will be less deep, the drawdown cycles. And as well, there are a lot of institutional buyers who will be buying the dips. But you can decide for yourself, and you can decide to be how aggressive you want to be. It's just like buying a house. You can put down 2% if you can, or you can put down 40% down payment if it's possible. And you can sort of control the size of your interest payments and also your drawdown risk. Now, Unchained Capital does not currently charge any prepayment penalties either, so you can pay off the loan at any time. You can take out a 12-month loan, and if you decide after 6 months you're tired of paying interest, you can just you can prepay the loan and get your collateral back, get your Bitcoin back. The other thing that can happen is if Bitcoin rallies a lot, you can also withdraw some of your collateral as long as you maintain that 40% LTV. And so if Bitcoin goes up a lot, you'll no longer need to have, let's say Bitcoin goes up another 100% and you've posted $80,000, you can take out that excess $80,000 if Bitcoin has doubled, just to make the math really easy, and you can withdraw that because it's no longer required as collateral. And when you withdraw that, you could use it, you could sell off a little bit of it to pay off your monthly interest on your Bitcoin loan as well. So there are lots of moving parts here. There's lots of flexibility, and it's going to be different for everyone. The question I always get when I talk about Bitcoin loans is, especially from people who are not familiar with collateralized lending and what really wealthy people do, it's this question, well, why would I want to get into debt by taking out a Bitcoin loan? My whole point is to get out of debt. Isn't the whole point of Bitcoin to move from a leveraged system to an unleveraged system and provide financial freedom? But I think this shows a real misunderstanding of how collateralized loans function and how useful they are. We've already seen the tax implications of selling your Bitcoin, but I think there's a fundamental misunderstanding of debt. There are types of debt and types of loans that really are debt slavery. Student loans are a form of debt slavery. We can thank Joe Biden and John McCain, when they were both senators, for making these non-dischargeable in bankruptcy. Both parties are responsible for this. And it'd be really ironic if Joe Biden forgives student debt after enslaving students for the last 20 years. That being said, I think it would be a good thing to do. So student loans are a form of debt slavery. They can hang over you for the rest of your life. Same with credit card loans, which tend to have an even much higher interest rate. These are forms of debt slavery. And when you watch popular financial programs, they rightly urge you to try to get out of debt. But when you reach a certain level, And this is especially done among the wealthy, especially among the extremely wealthy who are very rich in assets and maybe poor in cash. People like Gates and Bezos and Musk. And we've seen over the past few years, there have been news reports that have leaked the accounts that Musk had at certain points had all of his money in Tesla and SpaceX, and he actually had no cash to spend, and he was very reliant on margin loans. So you don't have to be quite this aggressive, but it's important to know that really smart and rich people like Gates, Bezos, and Musk all borrow against their assets, at least as far as I can tell from public reports. They borrow against their assets to avoid capital gains for the most part. And so borrowing against something that you already own is very different from taking on debt that's not secured by some asset or by collateral that you already own. It's very different, for example, if you put down 10 or 20% on a house, you don't yet have that full equity in the house. You're putting down 20%, and the bank's putting down 80% in the form of a mortgage. It's very different when you have a wholly owned Bitcoin or a fraction of a Bitcoin. This is an asset. This is equity because it's a bearer asset. There's no debt against it. And so especially if you're a true believer like I am and you think that Bitcoin is just going to keep going up for the rest of our lives. And again, you have to do your research and decide this for yourself. I'm very convinced of it, but if you're going to hold any significant portion of your net worth in Bitcoin, you have to do the research and you have to understand this. You have to understand Bitcoin, otherwise you won't be able to hold on for the ride. But if you do believe that Bitcoin, especially when it gets in the millions, that it'll somehow stabilize up there and probably even continue to appreciate, borrowing against Bitcoin might make a lot of sense for you. If you think Bitcoin's a bubble and it's going to spike up and crash down to zero, then you obviously don't want to borrow against it because you might get a really, really big margin call. And in that case, if you think Bitcoin's just a bubble that's going to go away, it might make sense to take profits and pay those capital gains taxes. So in that initial example we talked about, you put $6,000 into Bitcoin, it became $3 million, and you decide to sell it, pay capital gains tax. You only have about $1.6 million left. So let's look at the scenario where you instead borrow against that Bitcoin. You never sell it, and so you don't owe any taxes against it. Let's say you decide to borrow just a small amount. You borrow 10% of your holding. So it's a $300,000 loan. You will not get a margin call in this case unless Bitcoin falls more than 90%. And so in principle, you could borrow a lot more. You could borrow 20% or 30%. So call that a $600,000 loan or a $900,000 loan, assuming wherever you think that maximum drawdown is going to be, whether it's 70% or 80%, etc. So you can sort of size this the way you want. Let's just say you do that 10% loan of $300,000. You deposit your $3 million worth of Bitcoin, which at that point is just a single Bitcoin. And then you start paying interest on your Bitcoin loan. Let's say the interest rate is at 2%. You'll be paying, in that case, you'll be paying $6,000 per year in $6,000 per year in interest payments. They'll be payable monthly, but the annual rate, let's just say it comes out to $6,000. Now, how do you pay that $6,000? Well, there are lots of ways to do it. If you want to keep working at your job or your business that you started, you can obviously use that sort of income to pay your interest expense here. You could take that $300,000, you could buy a rental house with it or another investment property, and then you could use that real estate income to pay off your Bitcoin loan. And then also as a last resort, if you don't have these external forms of cash flow, you can always sell off a little bit of your Bitcoin every year to pay your interest. So rather than selling $3 million worth of Bitcoin and incurring that huge tax bill, let's say you just sell off, let's say this is actually much too high depending on your income, but let's assume that you're still paying that 50% total tax rate. By selling off, you could sell off $12,000 worth of your Bitcoin, pay $6,000 in taxes, and then use the remaining $6,000 to service your Bitcoin loan. So the great thing about this is you don't even need to have outside income to service the loan, as long as you're willing to sell off a little bit of your Bitcoin. And again, selling $12,000 of your Bitcoin is much better than selling $3 million of your Bitcoin. You'll end up paying a lot less in taxes, even if you hold this loan for 10, 15, 20 years. The interest rate will probably be lower, as we said. It's probably going to be closer to 1% or so. And we talked already about how Bitcoin is this really pristine collateral. Now, the next response I always get is, well, now I'm in $300,000 in debt for the rest of my life. Again, this isn't the worst thing because your net worth at that point is at least $3 million, assuming Bitcoin stays roughly where it is. And so if you have a net worth of at least $3 million, being $300,000 in debt is not a very big deal. That's fairly conservative financial management. But the good news is you're actually not in debt. Or if you are in debt, it's the kind of debt that you want to keep. So what happens, the real concern, of course, is when that loan is due, how do I come up with $300,000 to give the lender in order to get my Bitcoin back, and the $300,000 to pay off the loan? And again, these loans can be 6 months, they could be 12 months. Loans are always negotiable. You just need a counterparty to decide to match your maturity. So if you are as extreme Bitcoin bull as I am, after 5 years, I would suggest your Bitcoin's probably worth $6 million at that point. And so you can easily sell off a little bit and pay off your $300,000 in debt if you want to. You could also sell off some of your, if Bitcoin has stayed at the same price, you could sell off some of your $3 million worth of Bitcoin, pay off the $300,000 that way. Or what I think is even more smart is you borrow against your Bitcoin and you take out a new loan to pay off the old loan. This is called rolling your debt or rolling your loans. If Bitcoin has appreciated this much, it's a piece of cake because you can borrow 10% against your Bitcoin again, and you can use, at this point, rather than being just $300,000, that's $600,000 because Bitcoin has doubled. And you can use $300,000 of that to pay off your old loan. If Bitcoin hasn't moved, you can roll your loan in the same way. If Bitcoin's still worth $3 million, you can take out a new loan to pay off your old loan. This is what people do all the time when they refi their mortgages. They're taking out a new loan at a lower interest rate to pay off their old mortgage loan that has a higher interest rate. Now, as I said, again, don't borrow against your Bitcoin. Probably you shouldn't even own Bitcoin if you're bearish on it and expect it to trend down over time. But if you're bullish on it, and especially when it reaches in the millions, it should have much lower volatility, etc., as it becomes more widely accepted. In the same way that if you look at Amazon stock or Apple stock, extremely volatile in the early years, and you still had, in the early 2000s, you were having these 80, 90% drawdowns, and now they've stabilized. Apple or Amazon, they could still go down 40 or 50%, but the volatility is much, much lower at this point. And I think something similar will happen with Bitcoin. Now, you can just spend that $300,000 that you take from a Bitcoin loan, or you could use it to buy a rental property, as we talked about. You could buy it, let's say that $300,000, you're able to find a rental house that generates a 6% net rental yield after management expenses and property taxes and insurance and maintenance, etc. Somewhere around there, maybe it's a little higher, maybe it's a little lower. Then you have a very good situation here because you're paying 2% interest rate on your Bitcoin loan and you're earning 6% in rental income. You've got a 4% spread here. That's pure profit after taxes, of course. And this allows you a really easy way to service your Bitcoin loan because you just take 2% of that 6%, and you use it to service your annual Bitcoin interest payments. The good news too, and again, check with a tax professional to be sure, but those interest costs may be deductible if the property's a rental. If you use it for a primary residence, I don't think they're deductible. But again, that's a question for a tax professional. Let's say that you do take that $300,000 from your Bitcoin loan, you invest it in a rental house. Now you're in a really good position because you're going to make money when Bitcoin goes up in price because you still own your Bitcoin. Even though it's been pledged as collateral, it's still yours at some point. And as I expect real estate to continue to go up basically forever. And for those of you who don't follow my channel, this is because the US dollar is being devalued. And so stocks, real estate, Bitcoin, they will keep going up forever basically. And this sounds like a really crazy bullish thing to say, but it's actually a very bearish thing to say. As the US dollar system crumbles, assets denominated in dollars will continue to go up. And this macro view is one of the things that gives me a lot of confidence in Bitcoin and in things like real estate and stocks as well. And so if you take out a Bitcoin loan to buy real estate, especially an investment property, you'll make money when Bitcoin keeps going up in price. You'll make money when your rental house keeps going up in price. You'll make money as you can raise the rent every year because living costs will continue to go up as well. And so you're making money from these three different places. You can also, as your rental house goes up in value, you can take out a home equity loan against it, use that to buy another rental house, use it to buy Bitcoin. The possibilities really are endless. And depending how much leverage you want to take on, how much risk you want to take on. The nice thing about real estate loans is you never get a margin call on them. As long as you can keep making the monthly payments, your portfolio will never be liquidated. So you could have a 50% drawdown in a real estate price, which I don't think will ever happen again, at least in the US. But you could have something like that, and as long as you kept making the monthly payments, you would be fine. The nice thing about Bitcoin, as we've said, it's a long-term store of value. And as I hope I've demonstrated in this video, it's a way to fund your life forever. Even now, you can buy a full Bitcoin, for about 6% of $1 million. So it's still very, very cheap. You don't have to buy a whole Bitcoin either. You can buy a fraction of a Bitcoin. And so I think we're still all very early in this. When you take out that Bitcoin loan, you don't have to buy a rental property. You could spend that $300,000 on fancy cars or clothes or things that don't really hold their value, as long as you think Bitcoin will stay where it is or go up. And as I've said, you don't need to ever pay back that loan if you spent the $300,000, because you just take out another loan to pay off the first loan at maturity. And your only cost is the continuing interest payments. And especially if you've taken out a small loan relative to the size of your Bitcoin value, it would be very easy to continue to service these monthly interest payments. As I said, you can use external income, you can use rental income. You can also sell off a little bit of your Bitcoin every month or every year to make the monthly payments. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.